Good day, ladies and gentlemen. Commodity TV here, live out of our studio from Herisau. And we want to talk today with Dr. Alistair Cowden. It's my honor and pleasure to talk with him now in Perth, directly in Australia, about the final signature of the deal with Citroën Railway Investment Group for $213 million investment in the future production site at Little Eva in Australia, in Mount Roseby. Alistair, pleasure to have you here.
Good to be with you today, Jochen.
My first question, why decided your Chinese partners finally to move into the project and to invest over the $213 million US? And is the total invested amount enough to bring Little Eva in production?
So what's triggered the announcement is that last June we signed a heads of agreement or a framework agreement laying out the commercial terms. Since then, our friends at SRIG have completed extensive due diligence, including drilling, metallurgical test work, commercial and legal work, and negotiation of all the detailed agreements that will govern the joint venture. That's what we signed today. So clearly in the due diligence, they saw the value and they found no material issues. So they're happy to proceed and invest around $214 million US.
Interesting. What are the next steps after this final signature?
What we do now is we go to the regulators, both on the Chinese side, SASAC, to get the approvals that SRIG need, and also for the Chinese investment in Australia, we need a thing called the Foreign Investment Review Board approval. And we're hoping that and other conditions precedent, we have a number of things that we have to do to make the deal happen, mechanical and administration things. But the target is for those to be completed at the end of October, and then the joint venture is formed and the money flows.
When do you expect to be in production, and at what rates and initial mine life you should be?
Assuming we do manage to start the joint venture at the end of October, we would probably take until the middle of next year to do detailed engineering, optimize the project and just check everything, because the mining markets have changed since we did the feasibility study. Costs have changed. So we'll be optimizing everything and probably look to giving a final go-ahead in the middle of next year. And we're looking at probably around 20 months to build to first production. The mine life that we've published in the feasibility study is 11 years, but since then we made a discovery at Turkey Creek and we indicated that it looks like it could support at least another 2 years of production. One of the things we hope to do soon is to come to the market and give a formal reserve on Turkey Creek that will clarify that. So probably a minimum of 13 years, and given the fantastic exploration potential in this ground, and we haven't been doing any while we've been doing all this wheeling and dealing, I see no reason why this wouldn't have a multi-decade life.
Who has the lead in the mine construction and later then in the operation?
How we intend to manage the joint venture is a very familiar structure in the mining industry. Essentially, to get the mine up and to get the project and the joint venture up and running, Altona will manage. And we'll use our people. And in that initial period, we will set up a joint venture company staffing a general manager and all the right people, such that the joint venture is able to operate independently with guidance from its shareholders, who are ourselves and SRIG. At this stage, we're only looking at a small number of SRIG people coming to Australia to monitor their investment. And also one of the reasons they're keen on this is to learn about modern business and mining practice in Australia. So they'll be seconding more junior people to learn as well. But essentially, it'll be an Australian mine managed by Australians.
But how is the influence of the copper markets and the price of copper to your calculations for the future production, as copper prices are still low?
The feasibility study assumes $3 US a pound for copper long term and an exchange rate of 80 cents. Currently, the exchange rate, that's Australian US exchange rate. Currently, the exchange rate's better than that, and the copper price is lower than that. However, if you look at the two major forecasters, independent forecasters of metal prices, Wood Mackenzie and CRU, both point to the same things, and it's very obvious in the copper market. We have a number of mines, they're getting older, production is falling. We have the usual cyclical crash in mining investment. Not many new mines are getting permitted, but copper demand just keeps growing steadily. It's been doing for years, and there's a lot of copper out there. They're needed every year, 20 odd million tons of copper a year. And Every forecaster says the same thing. Come about 2018, 19, or maybe 20, the market will move into deficit. Markets usually anticipate those kind of structural changes in demand, supply and demand, and prices rise. I don't know what the price will be, but it was certainly well ahead of today's price. But the important thing is that even at today's prices, if you factor them into this project, it makes money. And because this deal is a fantastic deal because there's no debt involved. So usually little companies like us are hampered by debt and servicing debt. Here, any margin, even if it's $1, it goes to the shareholders, not to the banks. So we have chosen to give away equity, not debt, and that makes the thing much more financially robust and much less sensitive to movements in metal prices.
Well, Alistair, that was very interesting. Congratulations again, to this final signature and to this investment from your Chinese partners. And we look forward, to get some updates on the construction then, and really look forward on your ongoing movements. Thanks, and bye-bye to Perth.
Thank you very much, Jochen, and I look forward to being with you and other European shareholders in September.